Hello traders, it is Wednesday evening, October 10th. We've had a wild market and it's time for our weekly video. Let's see what we can find. So you'll see here that we've got the S&P 500 rallying, hitting a high in July, pulling back, lots of choppy price action back and forth around the 100-day moving average. Another attempt at the high, fails. This could be a double top formation, so we need to be careful. And now we've got a similar pattern to what we saw last August. We've got lots of chop, big gaps up, big gaps down, long green candles, long red candles. It's exactly what's happening right now. We have so many cross currents in the market. Here's what I can tell you for sure. I can do all the market analysis. There's a nice upward trend line right here. This is major support. So you've got this trend line right here plus the 200-day moving average equals major support at the 285 level. I am expecting this 285 level to hold. On the flip side, we've got one top, two top, major resistance at 301, but we also have this downward sloping trend line right here on the back side. That happens to coincide with a prior support level right there, which was violated. Now it's resistance. So, was support. Now we get above it. Now it's support. Now it's resistance. So, here's the initial breakout. Should have been support, failed, resistance. We get through, breakout. We're back and forth right through this center line right here. The market has gone nowhere, but it's waffled on both sides of that center line, and it's done the same thing around the 100-day moving average. So we've got resistance forming right around this 294 level, and we've got major support around the 285 level. So we've got about a 100-point spread in the S&P 500, and here's what we can expect. Chop back and forth, big time. The reason for the selling at the top is we've got weakening economies globally. We have Europe softening dramatically, and we do about 3 times as much business with Europe, 3 times the exports to Europe than China. So when it comes to trade, Europe is much more important to us than China. Europe's economy has been faltering in a big way. So that's weighing on the market because we had ISM manufacturing, ISM services, the unemployment report were all soft last week, and that's going to attract sellers when stocks are trading at a forward PE of 17. So there should be resistance every time we go up to the high. Well, what's causing people to buy if everything's so horrible? Well, you've got global interest rates at historic lows. Central banks are easing, and even the Fed looks like they're going to ease now because of the weak economic numbers last week. The Fed has also said that if trade talks deteriorate, they're worried about the global implications, and they would also ease to offset any kind of uncertainty there. So we got some news overnight that China is not optimistic about the trade negotiations that are happening. So I'm looking at the S&P 500. The futures are down 23 points right now. We're going to see some selling tomorrow, but I don't think that it's going to be overly dramatic unless there is some major mudslinging after the trade negotiators go back to China. Now, this was supposed to be a 2-day event. They've trimmed it back to be a 1-day event between high-level officials. That's not so good when this is the first face-to-face negotiations that we've had in a couple of months. The first time that high-level officials are meeting, and it goes from 2 days to 1 day, not a good sign. And there have been restrictions placed on Chinese companies in the last 2 days for civil rights violations. We are restricting travel for Chinese citizens for the same reason. They've done the same to Americans who have had anti-Chinese opinions that they've expressed. So it's a mess. If they came out, I wish Trump would come out and say there's not going to be a deal with China before the 2020 election. Forget about it. We're done with this nonsense. Let's get on with it. I think the market would sell off hard, and I think it would bounce right back because our economy hasn't suffered because of it. China's economy is stable. Consumers are not feeling the pinch because the yuan has devalued so much that the goods are actually cheaper. What's the end result? Our government's got additional tax dollars in its coffers. I mean, that's where we stand right now. There's not going to be a trade deal before 2020. I've been saying this for almost a year now. I think everybody else is finally starting to realize that as well. Trump is certainly starting to realize that. So every time we hear that there's a breakdown in the trade talks, it means less and less. So I think we're going to test this major moving average right in here, or the support level at 285. I'm anxious to sell some bullish put spreads. That's my take on the market. We're going to see resistance up at the high. We're going to see buying near the low. And the other force that we have working in our favor is that we have asset managers always looking to allocate into equities because fixed income is producing negative real returns. Bond yields are below inflation. So that means you lose purchasing power every year that you're invested in bonds. Not a good deal. So equities are the only game in town as long as global credit concerns remain stable. There are not any current global crises. So we'll keep an eye on that as well. But there's an underlying bid to the market. So this support's going to hold, this resistance will hold, or at very least the all-time high will hold. So we're going to be in a trading range with lots of choppy action and lots of news coming out. Let me say one more thing. This is not a high probability trading environment. When you get chopped like this back and forth, and as I mentioned, this horizontal resistance level, now support, now resistance, now support, now resistance, it has bisected the market. And so we're going on almost 5 months now that we have been completely sideways on both sides of this line. And we're probably going to continue to do that. But with big choppy moves like this back and forth, you can't really swing for the fence right now. You have to play very conservatively. You have to wait for these pullbacks, and then we're going to have a neutral strategy like selling bullish out of the money put spreads. That's what we want to do. So before I go any further, I'd like to get some housekeeping done. If you're watching this video on YouTube, you're seeing it a week late. I produce this on Wednesday nights for Option Stalker members. It focuses on swing trading. If you like the content, please subscribe to the YouTube channel because I'm going to be posting live daily day trades in the morning about an hour after the open for the rest of the year. Every one of these videos starts with a review of our prior picks. So if you watch these weekly videos, you'll be able to go back and see how our performance has been week in and week out. And there's a reason that we do well. We have a systematic approach. And so you can get everything that's shown tonight in oneoption.com, www.oneoption.com. Option Stalker is the platform that we use to find these trades. So let's take a look at last week's picks. Before I do that, I want to paint a picture for you. It's a week ago. I'm doing this video. We had a big market drop. We had one drop below that 294 level on Tuesday, October 1st. And on October 2nd, we had a nasty decline below that 100-day moving average. And we bounced a little bit off of that low. So this is when I did the video. And I mentioned to you, I want to sell bullish put spreads on stocks with relative strength, but we need to wait for a pattern. And the pattern that I outlined was we needed to see a deep intraday low, and then we needed to see two back-to-back bullish long green candles off of this low right here, and each one of those candles needed to close near its high of that bar. Again, on a 5-minute basis. And once we got that formation, I said we're going to see a reversal the rest of the day and we're going to get a bullish hammer. A bullish hammer is green on the top and it's got a long tail underneath. So sellers came in, sell, 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 sell. We got close to that 200-day moving average. Buy, 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 buy. And we got follow through the next day and through the 100-day moving average. So when this came out Thursday morning, we needed to be patient for the first hour of trading, and then boom! Was that a nice move or what? We made a ton of money trading Friday expiration and all day Thursday on that reversal. So, but we took profits. You got to be in and you got to be out in this market. Unfortunately, we don't get many sustained moves. So that's what we were working with last week. And now let's take a look at the bullish picks. So we've got the 100-day moving average right here. On MTCH, we wanted to sell a bullish put spread below that 100-day moving average. I think this is still a good bullish put spread to sell. I'm going to put up a indicator that shows relative strength, and there's our relative strength. When it's above 0, it's strong relative to the market. I'm going to hover over the E. This is a new feature that I just added this week. You'll see that it's out away from the last candle. Hover over it and you can see the next earnings date, 11/6 in this case. So we've got time to sell a couple of bullish put spreads using weekly options. So we've got a strong downtrend that's being breached right here. I like MTCH, good relative strength. Netflix, this is where the video came out. Stock is holding its own, still have this uptrend intact, good relative strength. That would be a nice one. That would be a moneymaker after a week. Nike, another one, holding this breakout. Stock's up here, video is here, should be making money on bullish put spreads. This was a big winner. OKTA, I told you, I love this bullish hammer here with the follow through the next day through the 200-day moving average. Sell bullish put spreads below the 200-day moving average. Well, this ended up to be just a fantastic buy the stock. I think it was up $14. So that was a great one. Shop. We wanted to get through this 100-day moving average. Then we want to sell bullish put spreads below that 100-day moving average. It had a couple of doge eyes above it. And yeah, not enough to really excite me. But I still think this stock moves higher. We just got to wait for it to close above that level and hopefully have a decent market. Snap was a short. We didn't hit our target for the short. We needed to break the 200-day moving average before we take shorts. So yes, that stock went down, so it would have been fine, but the S&P didn't cooperate. This is Tesla. It gapped down after the video, and we wanted to sell bullish put spreads on that 100-day moving average. Well, we had a beautiful chance to do that, and the stock finished strong today. Really, really nice. So that was a winner. TTWO is a bearish one. We like this bearish channel. We didn't get the trigger on the SPY, so we never would have done the trade, and we needed to have the stock close below the 100-day moving average. That didn't happen either. And finally, Alta. This was a loser. We like this breakout right here on big volume, and that breakout needed to hold, and it did not. So as it started to pull back, you needed to be stopped out right there on October 4th. That was your stop. So we had one loser out of 9 trades. I would call that a pretty good batting average. So let's see if we can follow up this week and do similar. So I'm going to put up a very easy search. First I'm going to take a look. These are your swing trading searches right here. Pop bull, buy into earnings, strong after earnings. You really don't need anything other than these 3 searches. I can go through these in probably 5 minutes a night, and I can pick out 1 or 2 good stocks each night. You'll have more stocks than you know what to do with if you just use these searches, but there are many, many other searches that you can run, many more that I should highlight, and I'm going to show you one tonight. But when I went through this, I didn't see anything that I liked in Pop Bull. I looked through the list, and nothing really caught my eye. And then I went into buy into earnings. Well, this gets me pretty excited 2 weeks ahead of earnings. And so I scanned through the list very quickly. I didn't click through all these, but I just looked for names that quickly came to mind. JPM is one. It's a bank. The banks have not done very well. So the premise behind buy into earnings is that these stocks have rallied 2 weeks into earnings, 2 weeks ahead of the earnings announcement, more than 75% of the time over the last 12 quarters. That is a big statistical edge. So we're looking for stocks that have a major moving average, that are going to be announcing earnings, that are in this list. And JPM may be a good one. I'm not crazy about the banks, but it's right on that 100-day moving average and it's holding. The stock that I did like, and there are many, LVS has good option liquidity to it. McDonald's was the one that came to mind. I like McDonald's. It's a defensive stock, meaning that it's very non-cyclical business. It's a flight to safety stock when the market's not doing well. So it doesn't move a lot. So it doesn't have big premiums, but you're able to get pretty close to that 100-day moving average right now. And with the market down overnight, you could probably get right on it and sell that. And it's got earnings on 10/22, so you've got at least this expiration and a week from Friday that you can sell and take. And you want to have these bullish put spreads expire before the earnings announcement. And the other one that I saw on the list was Microsoft. I like that one too. You can see how the stock has gone nowhere. This one really tends to rally into earnings as well. You get a pullback tomorrow, sell that bullish put spread right around that 100-day moving average. But again, we want to make sure that support for the market holds tomorrow, that the market's not falling apart. Within the first 2 hours, we should have seen support tomorrow. If we keep drifting down after 2 hours, then we're probably going to keep going down and going down. We'll have a downtrend day with a close near the low of the day. So we don't want to stick our head in the noose. The thing that really worries me is that when these trade talks are over, they could completely blow up. Trump could come out and say, we're done with China, forget China, we've tried, there's nothing happening. If he says that, the reaction's going to be horribly negative initially. And we'll probably test the 200-day moving average and we may even breach it. So I'd like to kind of get through the press conference after the trade talks conclude tomorrow. And if the seas are fairly calm, on Friday we can come in and sell some more of these bullish put spreads. So don't go too aggressive tomorrow. Don't go aggressive, period. With the market chopping around like this, we'll have more clarity once earnings start to really fall into place 2 weeks from now. So those were two picks that I'm going to put on the list today. And I'm going to go into strong after earnings. This is going to be a phenomenal search for us in 2 or 3 weeks when we've got lots of companies that have announced earnings. I'm looking for gaps through horizontal resistance after the earnings announcement. And then we're going to do a look back. We're going to look at stocks that posted over the last 2 weeks, had that big gap, and were able to hold that big gap and that are starting to move higher. Now, I love that, especially when the market has been selling off, because those stocks gapped higher, held the gap during weak market conditions. When the market starts to bounce and rebound, those stocks are going to fly. We can either buy calls on them if we want to play it safe. We can sell some bullish put spreads on them. So this is going to be a great, great search. Focus on these bottom four. If you're a swing trader, we've got all sorts of great day trading searches that we use above that. So let's put up the custom search and let's take a look for some candidates. I'm going to keep it pretty easy because it doesn't have to be hard. I'm going to go in, I'm going to mark option liquidity 3 or higher, and then I'm going to just simply mark across many different time frames strength versus the SPY. And this is the list that we get. So I knocked through those, didn't see anything too impressive, but it's a short list. It doesn't take you long to get through this list. The one that I found a lot of nice candidates in that I'm going to focus on is buy signal across multiple time frames. And notice that I'm using the D1 and I'm using the H4 and H2 time frames because we're swing trading. So the longer your time horizon for your trades, the more you want to lean on these longer term indicators. And here we go. We've got lots of good stocks to look at, but we don't have 100. we've got a very manageable list. If I wanted to, I could filter these even further by putting maybe strength versus the SPY, but I like this list. So I'm going to knock through this list. I'm going to click through it right now, and we're going to take a look for bullish put spreads. Low, higher low. We're breaking a downtrend line on a gap higher. Yes, I could certainly make an argument for selling a bullish put spread around the 25.50 strike. I'm not going to use that one this week, but yes, doesn't look too bad. This I like. AEM, gold stock, steady trend higher, pulls back, probably got a little overextended, hugging that 100-day moving average. Gold should perform well in a weak market. I like selling that bullish put spread below that 100-day moving average. Yes, AEM's going on the list. No, too strong a downtrend. I don't see anything positive there. Costco we've already got on the list. FEYE, kind of a chunky, choppy stock in here. A lot of price movement, you know. Now, if I look here, that's a horizontal resistance line. I have a cup and a handle and a breakout above the 100-day moving average and through this horizontal resistance line. So yes, I could say that you could sell a bullish put spread probably at the 14.50 level, maybe the $14 level, but it's too choppy for me. Look at these long tails. Okay, I don't like to deal with that. No thanks. So it's not going to make the list. Don't see anything that interests me there or there. I'm just going to continue to click through the list here. There we go, higher low, getting through that. I'd like to see it above that 100-day moving average. Lululemon through resistance right here. This is another choppy stock. No real pace to it. So not a favorite, but it is trying to get through that. It's trying to get through this downtrend line. McDonald's we took a look at. Now here's one I really, really like. I highlighted this in the video earlier this morning, the daily video, and man, was that a great pick. Rock and roll. So I like this. This is one you want to trade. I like selling the bullish put spread below the 100-day moving average. This is a volatile stock. It is going to pull back tomorrow with the market. So watch it. Watch for that relative strength. Watch for that orange line to be above zero on a 5-minute basis. That's what we want to see. Here's what it did today. This is when the video came out this morning, and I said, this is the best pick I have for you folks. I love Roku. And it went up from 114 to 118. It was a $4 winner. Sweet. And I think it's got a lot more upside. We can see it got ahead of itself, pulled back pretty hard. Tech stocks also pulled back. Love this horizontal support level. You can sell those bullish put spreads here. I think this stock you can buy after the market has shown support. And I don't mean just a little blip down. I mean big, deep sell-off. Boom, boom. Two big green candles. That's what we want. And I'm going to be recording my daily video tomorrow, and I'm going to post it an hour after the open. So if you can't watch the market, make sure to log into the platform or log into the chat room and watch that first hour video. I'm going to give you the landscape, and you'll know if it's time or not to get in the market. If it is, Roku is one that you want to definitely take a look at. SFIX, nothing there. Silver, Target. I like Target today. It's getting through this horizontal resistance, trying to make a new all-time high. Would I sell bullish put spreads on it? No, not with it being at an all-time high. Tesla. We loved that last week, and I still love it this week. We're going to see a pullback tomorrow. Yes, I would sell that put spread again at the 100-day moving average. I love the strength in this stock. Walmart, same thing as Target. Don't want to sell it near the high. WPM, yes, possibly. Right here around that 100-day moving average. It's really held up well there. Got a little bit of a head and shoulders there. Shoulder one, head, shoulder two. This is the neckline right here. So could be some weakness coming up ahead, but as long as that neckline at the $25 level holds, we're going to be fine on it. But WPM, I would not have any interest in doing that one. So we've got our bullish picks so far for the week. I mean, I did have one other that I ran across, and I can't recall the search that I found it on. It could have been a heavy volume search. Actually, I think what I did, and this is a really nice search that you can use. This search matrix finds everything. You just have to know what it is that you're looking for. And so in this instance, if we went in and we said, well, what is the percent range on a 60-day basis? Well, then we can go into percent 60-day range. And let's say that we're looking for stocks that are anywhere from the 80 percentile to the 100 percentile. This means that they're within 20% of the high over the last 60 days. And then I can click it. And those are going to be my search results, but I've got some other criteria marked here. And I thought that's how I found DOCU, but there you can see Apple. I happen to like Apple here too. And these stocks have all held up really well. Nvidia I've been trading. Nike we know we like. Lennar we like. These are all your strongest stocks. Super easy search. Percent of 60-day range, 80 or higher. You could do the same on the bearish side as well. So, but this stock I like. Just buy it when the market sells off. When the market sells off and we find support, this is a stock that you can buy. So I'm going to have DOCU in the list as well. So the two on the bearish side that I found, and I'm going to run a quick search and see if I can bring those up. I believe it was on bearish signals across the board. BYND I think is going to go down. I'll show you that one. I probably could put that on the list. I think this stock breaks this horizontal support. It's been leaking oil, and it's been weak relative to the market. So hard to see because it's been flatlining so much, but if it breaks down below this, call it $130 level, I think it's going to fill in this gap and it has a chance to really drop. So I would keep an eye on BYND. And if the 200-day moving average on the S&P fails, this stock is going to fall. But I couldn't find it on the list, so I'm going to put the two stocks that I found for shorts. I want to keep this video as short as I can. GME is one that I think is an excellent short. My favorite of the week, in fact. So you've got this big gap down after earnings. And now you're forming a horizontal resistance level. Stock comes up, tests that horizontal resistance, and immediately backs off. It could not get in the gap. If it got in the gap, it would start to fill it, but it never got there, and now it's challenging that 100-day moving average, and you can see the relative weakness starting to take hold. These are two back-to-back bearish candles. The stock was down today during a market rally. Short GME. GameStop. The other short that I like is not as strong a candidate, but a pretty strong one. And if the market sells off, this stock will go down. There's your bearish downtrend. There's your horizontal support right here. So you got horizontal support right in here. When this 100-day moving average fails and this horizontal support fails, the stock is going to go down and it'll probably test the 200-day moving average. It is Twitter. And so here we've got really relative weakness, you can see, because the orange line is below 0. So that's what I like for the bearish side this week. GME, Twitter, watch BYND too. That stock could crack. So let's go in and we're going to take one more quick look at the market. I'm going to go into a 15-minute chart because I want to show you the pattern that we're looking for. So if we go back to last week, Thursday, market's here. We've had some pretty heavy selling the day before. The video comes out here. I tell you to look for the two long green candles. ISM services comes out and the bottom falls out. And then what happened? Boom, boom, boom. Big green candles on a 5-minute chart that instantly fly back. Well, that is the capitulation low. We rallied the rest of the day, made money like mad right in here. Finishes on the high of the day. We carried a lot of overnight longs. Haven't done that in a while. Boom. Next big leg higher, right into the close the next day. And that was it. It was 2 days of action and we're done. That's all we can expect out of this market. What did it yield? It yielded a big bullish hammer with a long tail underneath. So sell, 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 sell. Sorry about that. Sell, 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 sell. We get within the 200-day moving average. Buy, 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 buy. And we close on the high. It leaves that big bullish hammer and big follow through the 100-day moving average. That is what we want to see tomorrow. I would prefer to see it early, meaning in the first couple of hours of trading, and then the bounce. Because if we drift lower the entire day, we're going to keep drifting lower. And then if we sell off the whole day and then Trump comes out overnight and says, forget China, we're not doing a trade deal, boom, we're going to knock out that 200-day moving average on Friday, and it won't be good to be short bullish put spreads. Be patient. This is a low probability trading environment. Chopping back and forth like this, that's what we're going to see right in here. So calmer minds prevail. Everybody goes home. We're all friendly again. There's just no trade deal. The market resumes. Got earnings season. That's fine. That's when we can sell those bullish put spreads. I think you can be a little bit more aggressive on Friday than you can tomorrow. And so let's bring up, I've already cheated, I've created a list and I've labeled it October 9th. And these are our stocks. So we're waiting for the market to have another capitulation low and we're waiting for those two long green bars on a 5-minute basis. Please check into the chat room. Please watch my daily videos. That's when I'll be able to give you a good read on the market and tell you, yes, it's time. Okay, you get the thumbs up. Sell some of these bullish put spreads. AEM, we're doing it right at that 100-day moving average. Close her down if we're below it. Costco, we're going to use this horizontal support line right here around the 285 level. Sell your bullish put spreads below it. If it's violated, exit the trade. DOCU, we're waiting for the market to find support, buy a pullback. If you're just going to buy the stock and be long, then that is your stop right in here. Okay, stock will probably pull back and test that level tomorrow. You'd like to buy it here and have a very tight stop. So very limited downside. And if you get the market bounce, boom, big upside. This is a powerful stock. It wants to go. So I wouldn't sell a bullish put spread on that. I just buy the stock. GME, that's our one bearish trade. Love it. That's your stop right there at that horizontal resistance line. We want to see it below the 100-day moving average. If it leaks lower, you can move your stop down to that 100-day moving average. This is a $5 stock, but if it goes from $5 to $4.50, that's a 10% gain. Could be a very, very nice trade for you. McDonald's, we're selling that bullish put spread below the 100-day moving average. Again, you may get a really nice opportunity to get some good premiums tomorrow. Microsoft, same thing. We're using the 100-day moving average. We're leaning on it. These are two earnings plays. They'll be announcing earnings. We do not hold over earnings. Make sure that those spreads expire before the earnings announcement or that you buy them back. I like Nike at the 90.50 strike or the $90 strike. Should get a nice little pullback on that stock tomorrow as well. Roku, I love, 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 love. I think you can buy the stock if the market bounces and then has an intraday reversal. For sure, you can sell an out of the money bullish put spread leaning on that 100-day moving average. It is a volatile stock. Watch how it opens tomorrow. Watch for that relative strength. We need that relative strength. Very, very important. Twitter is a short. we need it below the 100-day moving average, and we need the market to break down below the 200-day moving average. Then this one becomes attractive to us. But we're really focusing on let the market come in, let that market support establish itself, look for that big intraday reversal, temper your excitement tomorrow, make sure we get through the night without any mudslinging from Trump or Xi. Then on Friday, we should be able to sell more bullish put spreads and have a little more clarity on the aftermath from the trade negotiations. That's all I got this week. I think we've got some nice trades lined up for you. Choppy conditions, low probability trading environment. That doesn't mean we can't generate some income. We're in the right stocks. We're selling out of the money. We've got huge technical support below us. Let's try and generate some income while we wait for the market to get some direction, while we wait for earnings releases. Thank you. Have a good night. Again, if you're watching this recording on YouTube, please subscribe to the channel. Please give it a thumbs up. Trade well.